What's up, everyone? It's Caddy with MoneyVest. So SolarEdge absolutely got destroyed on the week, down over 23% in this last month of June. The stock is down over 48%, so it's practically been cut in half in the last 25 trading days, and it's just been on a complete free fall for falling 3 consecutive weeks in a row, and it's from all-time highs of $389. The stock is now officially down over 92%. So this is going to be a complete update for everyone who's been asking for an analysis on SolarEdge. We're going to be using our very own MoneyVest platform to conduct the entire analysis. And again, if you want to get access to the entire platform, link's going to be down below. We'd love to have you on board. By the way, this is a free public video that you can watch. It's accessible to everyone. Doesn't matter whether you're signed up or not. You can watch this video for free on our Patreon. Link's going to be down below, introducing the MoneyVest platform, and you can get a better idea of the power and the functionality of our platform launch that we're going to be having on July 8th, 2024. And you can sign up for a huge discount available at 51% off with the special pricing and lock-in for a lifetime, unless of course you cancel. So link's going to be down below, and we're going to be giving access to everybody, so you can join right now while there's limited spots left. So first things first, this is SolarEdge, down over 92% from well over $389, almost $390 per share, coming down to $25 a share here, selling off aggressively this past week. You can see the 3 consecutive weeks, volumes also increasing. And the interesting thing is that Goldman Sachs coming in with a downgrade and a price cut on the stock, which was very, very severe, prior to actually knowing that they were going to be diluting shareholders left and right, and the short interest was so dang high. So if you come over here, you'll notice 2 days ago, Goldman Sachs cutting the price target on SolarEdge from $49 to $25 a share, maintaining a sell rating. That's almost a 50% price cut for this company. And what do we learn? Like a couple days ago, we learned again that SolarEdge selling $300 million worth of convertible notes. That's a pretty big chunk of their entire market cap for a company that's worth about $1.5 billion. That is, again, about 20% of the entire market cap. So 300 divided by 1.5, we're looking at about 20% in share dilution. So that is exactly why the stock price last week sold off over 23%. So you'll notice that SolarEdge, a global leader in smart energy technology, has announced the pricing of its $300 million 2.25% convertible notes due in 2029. So these are 5-year convertible senior notes in a private offering to qualified institutional buyers. And the sale is expected to close on June 28th, 2024. So again, on Friday, subject to customary closing conditions. They essentially had net proceeds of $293 million after accounting for some fees, of course, which Goldman Sachs charged them. And the notes will pay interest semi-annually, so every 6 months at a rate of 2.25% per year. So that's actually quite a good interest rate. So SolarEdge, again, getting a very decent rate for the bonds that they're selling. But at the end of the day, the market sees that as dilution, which obviously is going to result in the stock price selling off. SoFi did something very similar, and they also sold off after the news came out, with the first payment due on January 1st, 2025, and will mature on July 1st, 2029, unless repurchased, redeemed, or converted earlier. And SolarEdge will not have the option to redeem the notes before June 28th, 2027. So they're at least locked for 3 years when it comes to redemption, and still post that date, the company may redeem the notes at 100% of their principal amount plus accrued interest if the conditions regarding the sale price of SolarEdge's common stocks are met. Holders of the notes, so the institutional buyers of these convertible notes, have the right to convert their notes into cash and SolarEdge common stock, or a combination of those two. Under certain conditions, the initial conversion rate is set to approximately 29.1375 shares per $1,000 principal amount of the notes, which corresponds to a conversion price of $34.32 per share. So, I mean, over the long term, I think there's still investors that are bullish on this company, that believe that, okay, long term, the price is still going to go higher, where they can maybe convert this into equity. If it's over $34 over a 5-year period, they can convert that. And of course, you'll notice that at one point it was trading well over $350. I doubt that we're going to see those levels again, but we're going to take a look at the company's fundamentals here in just a minute to give you a bit of an idea of course, how well or poorly this stock is doing at the moment. Now, one more thing I want to mention is the short interest. 11.8 million shares under short interest. You can see that it was accelerating in the last couple months here. So you'll notice it's gone from 8.9, 8.3 million to sitting well over 11.8 million shares. For a company that doesn't have that many shares, only 58 million, that is actually quite a lot. That is a shares outstanding. So basically a short interest of over 20% as well. So definitely short sellers took advantage of this share dilution announcement. And again, just shorting the stock into oblivion, and again, selling off over 23% this week, 40% in the past month here. So coming over to our platform, so SEDG basically gets an M score of about 2.78 right now. If you come over to the MoneyVest metrics, and if you go over to, let's say, the last 7 years worth of analysis, what you'll notice is the revenues have gone from about $607 million for this company to now sitting at almost $3 billion. So that is, once again, a very high growth, and that's a 29% CAGR for the company over the last 7 years. Gross profits have gone from $214 million to well over $763 million. So that is also almost a 26% growth, also a high growth for the business. So that's solid, but shares outstanding have increased by 3.69% for the business. So what you'll notice over here, if I remove for all of this, and if you come back, you'll notice that shares outstanding have gone from about 45 million shares to now sitting at over 57 million shares. That's why I showed you about a 20% short interest, and that's a 3.69% CAGR in the past 7 years. Net income's gone from 84 million to sitting well over $34 million. So that has declined rapidly. So that's a 10.83% decline on a compounded basis. Prior to that, $93 million. Prior to that, $169 million. So really, we've seen the net income come down significantly for the company, and operating income's also gone from $91 million to $131 million. It's about a 9% CAGR, but that is, again, a very, very slow growth rate also. But net income has definitely come down quite rapidly, and free cash flows have been more or less negative over the last couple of years, as you can see over here, with $115 million in 2027. So if you start to kind of plot some of these things, so again, revenue growth has been strong, gross profit growth is also good, but when it comes to net income, it's been declining. So if I only include for net income, you'll start to see the last 3 years worth of declines here for the company. Operating income over here also coming down, not as significantly as net income, but operating income definitely coming down much also, and net income coming down much faster, and free cash flow is unfortunately going down to negative territory. So it's not as bad as net income. It's even worse that it's actually gone from being positive to 2022 and 2023 being negative for the business as well. So you can see that very clearly. 2022, towards the end of 2021, was kind of like that inflection point where the stock price also started to turn. As you can see, that 2023, beginning of 2023 is really when the decline started for SolarEdge, and it's down 92% as the price sold off, and the fundamentals also started performing really poorly. Now, if you come over to some of the other stuff, so margin-wise, also coming down, so worsening, operating margins worsening, net margins worsening. So we can see very clearly, you can see the overall trend and how everything's been coming down. Gross margins from 35% down to now 25%. Operating margins and net margins also on this significant decline lower. And on a 10-year basis, they actually did increase. They peaked out in 2017, and since then, we have just seen a significant decline for margins as well. That's why they have been worsening. If you come down some of the other sort of efficiency metrics, I would say somewhat efficient to 2023 numbers being very, very poor. So if I mark out these three things also, you can see a very similar trend. Everything is moving in the same direction. Return on assets, equity, invested capital, and capital employed, they all look the exactly same because, of course, they're not that efficient anymore, and the company's just been seeing that decline since 2017, 2018. In fact, if you come over to the stock price, you'll notice that 2020 was kind of like the peak, and it didn't really do anything for a very long time. So this right here was an area of consolidation for SolarEdge for a very, very long time. So it was really just consolidating sideways in that range for about 3 years. So starting in 2020, like middle of 2020, all the way through 2023. So 3 years, price didn't really do anything. It was just kind of trading in that range. And even though that volatility was so high, because that range was essentially a 78% range, it's just going sideways, sideways, sideways. And then, of course, huge selling pressure coming in, and the stock price getting absolutely destroyed. If you come over to some of the financial table metrics, it actually scores really well. So that's actually one of the best things for SolarEdge, is that it's got more cash than debt on the balance sheet, which is, again, negative net debt as of 2023 of 600 million. Current ratio is good. Quick ratio is good. Debt to free cash flow is excellent. Total assets over total liabilities and total debt also very, very good. Cash to debt over 1.9. Solvency ratio is low at 4.2% as of 2023, but inventory as a percentage of assets is high at 31%. That is something to keep in mind, because that is a pretty high number. And goodwill is also pretty low as a percentage of assets. And when it comes to valuation, it's still 2023 154, because I'm assuming the earnings have absolutely gotten destroyed for the company. So let's just go back to the last 16 quarters and let's plot for revenue. As you can already very clearly see the decline in revenues. Let's go over to gross profit. Let's go over to also plotting for operating income, and then of course net income as well. And again, you can see the trend. This is exactly what happens. And this is one of the first reasons why I like visualizing fundamentals, is because it gives you a very clear idea of what went wrong, what really happened for these companies. We've seen this with Palantir, we've seen this with Enphase, we've seen this with a company that I was analyzing earlier today, like Endava, and this is no different. SolarEdge, you can see a very nice consistent growth in revenues and gross profit, and everything's kind of moving in the right direction, and then boom, everything started selling off, and we are starting to see losses for the business as well. Share dilution, lack of sort of adoption from the microinverter, solar renewable energy space. Enphase is in the same boat. There's a lot of companies in the same boat that are not doing as well because of the lack of demand. There's a lot of headwinds with higher interest rates, and therefore affecting inventory buildup, also very, very significant. Because if you come over to the balance sheet, let's plot for inventory levels. So what you'll notice is inventory. Take a look at that. I mean, inventory is just huge, 1.5 billion as of last quarter. If I remove for operating income and net income and of course gross profit, take a look at how quickly their inventory has grown. I mean, they are just not selling. They're just not selling their product. And this is in the last 16 quarters, right? You can see that very clearly how quickly inventory is ballooned as a part of their balance sheet. So again, and if you come over to total current assets, if I plot for that as well, I just want to really help you understand the gap between these two, right? So in 2022, so we're talking March of 2022. So take a look at this quarter. There's so much gap between inventory and total current assets, right? So just take a look at that gap. Now look, that gap has diminished so much. That means inventory as a percentage of current assets is very, very high, because what's happened is very clearly, as you can see, that the current assets have come down and inventory levels have gone up. So that's why that gap has diminished significantly for SolarEdge. And for that reason, again, we're starting to see the numbers being reflected in the stock price as well. If you come over to some of the ratios, so let's take a look at how or where it's trading at the moment. So again, we've got a lot of negatives. Trailing 12 months, we got negative 5.52. Forward, negative 6.13, because I'm assuming the analysts are not very optimistic. We got a hold rating with a low target of about $33, a high target of $315. Somebody's still insane enough to put a $315 high target, 28 hold ratings, and we got $75 as the average target for SolarEdge, with analysts expecting 2024 to be a negative year of negative $4.21, and then rebounding up to $3.07, and then of course increasing to $485, $573, $467, so on and so forth. Revenue still expected to go up, but of course 2024 being a very brutal year, down 53% on a year-over-year basis for the right reasons, because the company is expected to hit a lot of headwinds in 2024. Of course, but on top of that, the share dilution also coming in, so it's kind of hard to really forecast what the business's long-term future looks like at the moment. So that's where we are with SolarEdge. I can't really forecast for earnings, because it's expected to generate a net loss in 2024. Cash flows also, I believe, are going to be expected to be negative, because if you come over here and if you plot for cash flows, if you come over to the cash flow statement, all the way at the bottom, you're going to see free cash flows that we've calculated for you. And you'll notice that it's been very inconsistent, especially the last 6 quarters. It's been just generating negative free cash flows and accelerating to over 243 million as of the recent quarter as well. So in my opinion, I think this is a stock that I would stay away from until there is more clarity on what the future looks like for this business. And this is going to be that next support, unfortunately, at $15 for SolarEdge, and it's now starting to break down below this support level, which will be turned into a resistance for this company as well. Another resistance to keep in mind all the way up as much as $65 per share. There was a little bit of a descending triangle that of course broke down pretty aggressively. And the next upward is going to be down to 1540. So hope you all enjoyed this video and a complete update on SolarEdge. Again, if you want to get access to this entire platform, do a lot of comprehensive fundamental analysis for yourself. Link's going to be down below if you want to join. Of course, take advantage of the beta launch that we're going to be having on July 8th, 2024. So just about 8 to 9 days left, 51% off. You can lock this special price in forever. And again, have our complete calculators, financial models, analyze stocks with our MoneyVest metrics. So link's going to be down below. We'd love to have you on board and get your feedback. As always, happy investing. I'll see you all in the next video.